Hello, you are very welcome to this pre-scene analysis series. Over the next 10 or so videos, I'll be analysing the CIMA February 2020 management case study. And the pre-scene material for this particular exam is based on a fictional business by the name of Trevel Records. So over the course of the next 3 or so hours, I'll be going through each page of this document, highlighting the most important issues as they arise, thinking about likely exam issues, paying particular attention to the new 2019 CIMA syllabus topics that could come up on exam day. So this is the 38th time I've gone through a pre-scene document by CIMA. So along the way, I've learned a thing or two about what constitutes a likely exam topic and what constitutes an effective analysis of the pre-scene. So let's take a look at the first page of this pre-scene. You're told that Trevel Records is a quoted business, so stock exchange listed company that creates and sells music to a global market, and it's based in the fictional city of Capital City in the fictional country of Fortuna. We don't have a lot of information on Fortuna as a country, but we do know that it's very developed with a high standard of living, and the citizens of the country have high disposable income. So that is very relevant, we could say, straight away, to a company like Trevel that is dealing with the sale of something like music, which isn't an essential good or service. And it's going to be very, very important that the people living in their home country can afford to spend on goods that are non-essential, such as music, books, cinema, etc. So music is purchased out of this sufficient disposable income. So we're thinking about a home market with good demand conditions by the looks of it. Fortuna's currency, then, we're told, is the F dollar, and any company listed on the stock exchange is expected to report in their financial statements in accordance with international financial reporting standards. So, unpacking what has been presented in this first 3 paragraphs of the pre-scene, as a quoted company, there are going to be pros and cons that come with that for Trevel. Obviously, there are going to be more rigorous requirements for publicly listed enterprises, and they are subject to pressures from shareholders chasing return, and they're subject to a lot of analysis from banking analysts, etc. So there's a lot of as I said, regulation and attention paid to those companies. They have to adhere to corporate governance standards. They have to publish their financial statements every quarter and have those statements audited as well, which is a cost for the business. However, they have access to more finance. They're not just relying on debt to expand, but they can tap equity funding as well and issue shares and raise money in that way. Just a couple of accounting standards that instantly come to mind, which you come across in F2, IAS 33 for earnings per share. That's a key shareholder ratio, and we'll discuss the shareholders throughout this pre-scene. And IFRS 8, which deals with operating segments. Now, as a publicly listed company, present in a number of markets, it's likely that Trevel would be obliged to produce segmental analysis in the notes to their financial statements. So what do we mean by segments? We mean dividing their financial performance results according to the different products or service that it offers, or according to the different geographical areas that it is present in. A word then about the creation and sale of music. Certainly an interesting industry, and it's one characterized by huge uncertainty. You cannot mass produce a hit in the same way that you can mass produce goods in a controlled manufacturing environment. And it's very, very difficult to predict with any kind of accuracy what will sell well or not. So very, very high levels of uncertainty. That affects, obviously, shareholders who have put money into the company and are expecting a return. And as a global company, it means that the company is less dependent on its home market. And in fact, in the fourth paragraph, it discusses that. Fortuna, we're told, is a big market for music sales. In fact, it's one of the biggest 6 worldwide. And those 6 countries account for more than 70% of revenues from the sale of recorded music across the world. English language music, we're told, sells well across all markets, although English is not necessarily the first language in many of these big 6 countries. And later we'll see that actually this business, Trevel, is very geographically diversified. As I said, they're not dependent on their home market. They have about 60% of their revenues coming from outside Fortuna. So geographically diversified, that's a good thing. But it also represents a challenge, because if you're present in a number of different markets, for something as variable as music, it varies greatly, the tastes from market to market. So the company will need to adapt to those differences in taste if they want to effectively sell. So knowledge of changing music trends and tastes across different markets, and indeed emerging talent in those different markets, is going to be a crucial part of what makes this company successful or not. So they're going to face a lot of competition as well across those markets, and we'll talk about that later. Something else then in relation to the fact that the company is geographically diversified is the probable relevance of IAS 21. That is the effect of changes in foreign exchange rates. This business, because it's trading across different countries, is going to be exposed to foreign exchange risks. So whether the F dollar fluctuates in value against other currencies like the US dollar, the British pound, the euro, etc., is going to affect the financial performance of the business in any one year. There will also be foreign subsidiary operations to consolidate, which is obviously a topic in F2, the consolidation of financial statements, and that's going to be relevant, and we'll discuss that in further detail when we look at the financial statements. So we can expect advanced facilities and talent in the industry to be present in Fortuna, given the fact it's such a big player globally. So it's likely that the conditions, the factor conditions in the industry in Fortuna are likely to be quite developed, and that would play into Trevel's hands. So as a financial manager, you're moving up in the world. You're no longer a lowly finance officer as you were at the operational case study level. You are now a manager, and your responsibilities primarily reside under the management accounting area, and you report to the senior financial manager, someone you would likely have a lot of interaction with on the day of the exam. So the music industry, we're told, is wide-ranging, very diverse. So again, we're seeing the challenges of effectively navigating the different markets, the different genres of music as well. And Trevel is a recording company, or record label, and it generates its revenues from recording music, first of all, for sale on physical media means, so they will be CDs, etc., or through the increasingly popular digital distribution channels. So they would be companies like Spotify. And we will talk in great detail about the impact of those digital distribution channels on the industry as we work through this particular pre-scene. That is in fact a big part of the new E2 syllabus, and the way in which digital platforms are disrupting traditional markets. So we'll talk a lot about that. They have changed obviously significantly, these sales channels, over the years. They've moved away from physical media such as CDs and vinyl records to digital channels. So as a finance manager, your role is as follows. You will be monitoring the implementation of strategy. So at the operational level, it's all about the execution of day-to-day tasks. At the management level, you're going to be more overseeing some of those day-to-day tasks and indeed interacting with people higher up the hierarchy to implement, or rather monitor the implementation of the strategies that they devise. You'll have a medium-term focus, so maybe 1 to 3 year time horizon. You'll be expected to advise on the investments that the company makes in different products. To recommend one product or service over another, for example, you'll be expected to think about the prices being charged as well for those products, and you'll be expected to think about the risks attached to the launch of those products. Because you're dealing with a longer term time horizon, you'd be expected to recommend financing that was longer term in nature. There will be more advanced financial reporting considerations. I've already mentioned the fact that consolidation is a big part of F2, and we will look at consolidated financial reporting statements later on. Because you're a manager, you will now be expected to interact with and influence top management. So people skills and leadership skills are going to account for more of the marks than they did at the operational case study level. And you'll be expected to consider the wider environment within which your company is working. So it's not just all about your business. You need to get your head up, consider competitors, consider customers, consider suppliers, consider shareholders, etc. So we've talked about the top 6 markets in the world. Fortuna, the fictional country of Fortuna, is part of that top 6. In real life, the top 6 is as follows. The United States is the biggest market, Japan then, UK, Germany, France and South Korea. And you can see the huge range of differing tastes across those markets. Whereas the US and UK might be quite similar, Japan and South Korea are going to be massively different. Germany and France are going to be a little bit different, perhaps from the US and UK. They would also have their local tastes and local artists that are popular there, but will be unknown in the US and the UK. So it's going to be very challenging to market music effectively across such a wide range of different markets. P2 has a big role to play in the management case study. Managing costs is going to be important in the creation of value. This company sees its profits and revenues decline, and in that trying environment, it's going to be more about managing costs to make profits instead of drastically increasing revenues, which is less realistic in a market that is feeling the squeeze in recent years. Pricing is going to be important as well. I mentioned that. Managing responsibility centres will be important as well. Non-financial performance measures needs to be kept in mind. So it's not just about focusing to the exclusion of all else on financial performance. There are other non-financial performance measures that would be kept in mind. And you think about something like the balanced scorecard, which gives a more holistic view of how the company is doing. Transfer pricing as well might well be important, since this is a company that operates globally. Risk management I've mentioned before, in particular in relation to the music industry. Copyright is going to be very, very important. And the appraisal of projects, since the production of a music album is likely to generate cash flows with a time horizon that can run over years and even, if all goes well, across many decades. So the music industry is made up of a broad collection of individuals and companies that we're going to look at next. So this will explain the ecosystem of the music industry. And that is something that's discussed in E2, business ecosystems, how the different players and parts of the ecosystem relate to one another. So lots of different interested parties to be managed, and relationships will need to be strong between these different players, and also things like negotiation, conflict management are going to be important as they arise. So first of all, we have the composers and songwriters who make the music. So music is generally written, we're told, by an individual who retains ownership of the copyright of that composition. Others who wish to perform the music publicly then would have to pay a royalty to the owner of the copyright. The creation of music in return for a fixed fee by composers is protected by copyright. So a good legal team is going to be necessary for Trevel, since there are many lawsuits in this industry. So these individuals are obviously crucial to a company like Trevel. They're the ones who write the hits, the creative individuals who ensure that the company does well or not. So finding these people is going to be crucial, and it is not easy. So the skills that they have are intangible often in nature, and what you often find is that there are a few of these individuals churning out a large percentage of the hits you see in the charts. So these people have rare skill sets, which means that they can negotiate good returns and good fees with companies like Trevel. Producers and promoters of live performances come next, and live performances take the form of concerts. Audience members purchase tickets to go to concerts, and live performances, we're told, create revenue generating opportunities for agencies, first of all, who sell the tickets and take a cut, and for the venues that accommodate the performance. So they would be sports stadiums, etc. Fans believe that a live performance is something that is different and an experience worth paying for. And we will see later on that live performances, this area is doing well, while recorded music has undergone a downturn over the last decade or so. So it's an obvious area for Trevel to look at if it wants to generate more revenues. There's also a risk associated with live performance, of course, in that an artist, while they might be very popular with the records that they produce and sound great, etc., and you can apply all sorts of magic in the studio, which relates to the next group of individuals we look at, the sound technicians and recording engineers, that if an artist is not particularly good live, it could affect album sales and generate negative publicity. Sound technicians and recording engineers then, they're the ones who record either live or in a studio setting. Studio recordings are carefully engineered, and they are generally of higher quality than live performances. The question needs to be asked at this stage whether Trevel owns its own studios or whether it is hiring them, and there's a cost-benefit analysis worth doing there to ascertain which would be a better option for the company. Recordings then are created mostly for commercial purposes. They're sold to listeners on physical media such as CDs, vinyl records, etc., or increasingly as digital downloads. Music companies then generate revenues from licensing their recordings as well to TV companies for broadcast on television shows, etc. The equipment required to produce reasonably good quality recordings was previously extremely expensive, but now with technology, the cost has been greatly lowered. So right away, we're seeing a threat to the core music production activity of Trevel. Recording music used to be the preserve of the recording studios and the artists they had signed. Now, anyone can record a high quality recording in their own bedroom with a laptop, a decent microphone, and some cheap software. So technology, we're seeing, has lowered the cost of entry for artists, and they're no longer reliant on an intermediary like Trevel. So that represents obviously a threat. We're going to see that technology has impacted the music industry right across the board. So here we're seeing it's lowered the entry barriers for potential musicians, and they can cut intermediaries like Trevel out and record themselves. And later we'll talk about how streaming companies like Spotify and their digital platforms have utterly disrupted this market. So, websites and social media are being used as promotional means to get music out, and distribution channels for individuals to get their music out to a wider audience. So again, technology lowering the costs of reaching an audience. Social media presence is very important indeed for popularity and album sales, and it's something that Trevel itself can tap into to lower their marketing costs. The music industry then also encompasses a number of businesses that generate revenue from the sale of music or associated services. So these, again, are features of the music industry's ecosystem. These are all stakeholders that Trevel and you as a financial manager need to consider. Agents and agencies. So often musicians will be represented by agents. They promote these musicians. They negotiate on the musician's behalf with record companies like Trevel, and as a result, in exchange for that service, they get a percentage of fees and royalties that the musicians receive from the record companies. So often these agents act as a kind of gatekeeper, and they have huge influence often over the decisions that the artists actually take. So it could be that Trevel is trying to negotiate with an artist that they have on their books already, who has had a lot of success with their first album, and Trevel wants to keep them on for subsequent albums because they've proved to be successful and to have an audience, and that gives them a lot of negotiating power. The agent would know that and can step in and negotiate very favourable terms on their behalf, or threaten to leave for another record label that gives them what they want. So the agent is a primary point of contact for a company like Trevel. And thinking of E2, negotiation and conflict management would enter here, where there is a negotiation taking place with each side trying to get the best deal possible. There is the potential for conflict to arise. So managing that, looking perhaps for win-win solutions, is going to be crucial for Trevel. Another intermediary here, lawyers, because contracts can be complicated and there are huge sums often involved, and we're talking about quite complex, non-tangible areas like copyright and the protection of intellectual goods. You can often have disputes over who owns what and who owes what to whom. So managing the risk in relation to legal threats is going to be important for Trevel. So we would like to see highly qualified and experienced lawyers in Trevel's legal team to manage the creation of contracts, to manage legal disputes. And the record companies themselves, the record labels, most visible part of the music industry, it says here. I would actually argue that they are not. It's the artists that are the most visible part of the industry. But previously record labels had huge power. Now they have less power. Their territory has been encroached upon and affected, I think, by technology, and they haven't reacted well to it. This all started probably in the late 90s, the early 2000s, with the advent, the explosion of the internet and digital technologies. So something like Napster came on the scene. It was created and allowed for the upload and easy sharing of digital files, and often they were music singles and albums that people could then illegally share and illegally download, and that impacted on the revenues of record companies. And they didn't really respond very well to that threat, and they just kind of kept going as they've always gone along. And then more legitimate means of digital distribution came up, like Spotify around the 2005, 6, 7. They started to become popular, and now they're the norm, and they have huge bargaining power. They have eroded the revenues of record companies, so they're no longer as powerful as they used to be. So apart from recording and distributing their artists' music, They also find and promote new acts. And I think arguably that is where most of the value from record companies now resides. Finding talent and promoting that talent. They spend heavily on advertising and publicity, and we will look at some cost information later on that underlines that point. Marketing expenses seem to be the heaviest area of expenditure for these companies now, which underlines, I think, the importance of that activity. It's no longer recording the music and distributing it that is the highest cost. It's marketing the artists. Musicians then are encouraged to behave in a manner that attracts the interest of the popular press. So there's a potential ethical dilemma there. It may well be that with a rock group, for example, that the record company is kind of encouraging them to behave badly because it kind of ties into the rock star image and will generate press. There's no such thing as bad press, as the old saying goes, and any attention then would lead to higher sales. So, as I said, there's a potential ethical dilemma there. If something comes up in relation to an ethical problem, please feel free to refer to the CIMA Code of Ethics. Examiners really like to see that model used. So risk management. Artists misbehaving could impact Trevel either negatively or positively depending on who it is. If it's a rock star, could actually be good. If it's a teen pop star, not so good. Intangible assets then we're seeing are going to be important in relation to this industry. When an album is produced, it generates benefits over many years. So conditions are satisfied to capitalize the development cost in making that album in accordance with IAS 38 Intangible Assets. It is the intangible rather than the tangible assets that are going to generate the bulk of the revenues for a company like Trevel.